Good evening. Today is the 31st of January, 2024. It's a Wednesday, and it's a Fed meeting and decision day. I'm not waiting for the Fed decision to be announced in 3.5 hours because that's obviously expected by majority as a pass. But what they are expecting and fiercely waiting for is how many rate cuts will there be? Three, five, six, 15 of them. Each rate cut is 0.25%. So four of them makes 1% only. So for the moment, there are very interesting things happening just as the meetings continuing since yesterday. Today, obvious news came out, and I prepared, and in this morning in my Turkish broadcast, I announced that I'm selling and leaving majority of my technology stocks for some near future. Things don't look good. They started not looking good, not just for the U.S. It started from China. China gave a lot of additional money, but still the government tried to stimulate the economy, stimulate the markets, but all the billions of dollars paid resulted in nothing. So the stock exchange, Chinese stock exchange, came back just like from where it fell a couple of days ago. Similar problems are going all around the world. In Europe, Germany is announced to be in recession for the quarter, and there are no news that are coming soon to qualify for a better next quarter because the interest rates and the war in Ukraine, everything is continuing as usual. So 2 quarters back to back means a perfect recession startup. In the USA, there are professors who are also professors, in the John Hopkins University. They calculate as a monetarist, they say it's obviously baked in the cake. The recession is coming in the first quarter. And we are now in the first month of the first quarter. We are going into second month of the first quarter. So next meeting of Fed will be in March. So now the people are expecting how many basis points are they going to announce? Because in this meeting, they are not expecting, as I mentioned, but they are waiting for when will the rate cuts start. I'm not so anxious for the rate cuts because, as you know, I am a gold bug as well. So gold only behaves if I'm just interested in my own interest of making money. I prefer Fed even increases rates. You may think this is dumb because rate increases against gold, which is not the case. Rates increase. What happened? The spending is going like to havoc in the US. Why didn't people cut? Because what they don't consider nowadays is the inequality of wealth, because the wealth is distributed so unevenly. Only 5 to 10 to 20% gets more than half of the rich and richnesses. They don't get affected by any tight, and they have the money, they have the savings. The remaining people cannot save a penny. They live day to day. They don't have any savings. So for the other people, it doesn't matter even if they increase the rates to 6, 7, 8, 9, 10. There's no place in the cruise ships for travel. And asking to all most Americans what they plan a trip abroad, they all say, yes, I want to make a trip abroad this year for sure. So this is so what happened with the rate increase? Well, the inflation came down. Well, did it come down because of the rate increases, you think? Or did it come down because of the M2 shrinkage that the Fed applied by not renewing the bond sales? Today, in fact, there was a $130 billion, I think. I don't have the exact number right now in front of me. They restarted selling bonds in the USA. So things are getting, and the reverse repo facility shrank to zero, which they used during this past time. And today, a news came from a New York bank. I don't want to express the name, but, well, I can't because its stock listing is frozen because it fell 43% in a single day, just today, which means it lost half of its value, this bank, and they closed its what we call in, let's say, buy and sell orders. Let me put it that way. And private payroll growth slowed to 107,000 in January, way below ADP reports. And yesterday, worst of all, UPS announced it's going to kick out 12,000. That's what the right term is, kick out 12,000 workers, and which means if I don't care about the white collar jobs to be a sign of recession, because they may just change due to the artificial intelligence. Some jobs may not be needed, but when it comes to logistics, that's the only thing I look in this. When I go with my car, I check the truck facility. Also, I am in contact with so many logistic main warehouses, even in Turkey. I just check how is the action? How is the action? Because everything that goes to homes are delivered through cargo offices like UPS. And if the business is very slow, and besides, like during the pandemic, there was carrying of food and other stuff to home. So it's very normal. You can say now those are all cutting jobs, because now there is no more pandemic, so people can go and shop. But now there is a different situation. This is regular logistic supply. They are cutting 12,000, not 1,000, 2,000 people, which means big recessionary signs are seen at the logistic warehouses. Today, with this bank failure, another sign I read small signs and make decisions from them. The Senate Banking Committee member yesterday said Fed should hasten its steps to reduce the interest rate, which means he knew that the banks are in big trouble. Small banks are about to collapse, and most of the facility that they created, which wasn't created before, to save not to save, but let's say to save people's money, they had them bought by the bigger banks, and it's ending on the 11th of March. 11th March is a very big deadline for the banks to close this facility. So there will no longer be the facility that was used to save the small banks. And commercial building credit problem is extremely bad in the USA, because most people are not going back to job. Many companies are calling their staff, if you don't come to work, don't ever come to work. But they are not going to work, so people are used to working from home. It's very comfortable, I think. So even increasing it to 2 days, 3 days became what is work? So it's not something preferred, really. So basically, why, if people don't go to offices, why do we need those buildings? They are just ornamentation, like monuments. So, and the people who have services in the office districts, who are they going to sell? Who are they going to deliver? Who are they going to, give service and make money? So there is a big failure on the commercial building side, which is about trillions of dollars. If they cannot get their rents, they are not going to be able to pay the loans. And the majority of these loans are given by small banks, which are in the bucket. So there is a huge danger. And if the Fed keeps the interest rates high for longer, these banks have least possibility of remaining without biting the dust and going under, because they are in big trouble. So how many can you buy? All of them? How many? And how efficient is buying banks that are going under? It's not a capitalistic system. You should let people fail if they made a mistake. It's not a general situation, but it's becoming a general situation right now. So right before this tonight's meeting of the Fed, I just wanted to give you the details of what are happening. So there are about 5, 4, 6 calculations. So after checking, it may be just a coincidence. I'm not a magician, but right now I'm looking at what's happening in the stock exchange, New York Stock Exchange, and Dow Jones and Nasdaq, I don't see very good signs in front of. But it's normal before the Fed meeting. Now the important thing is going to happen. What's going to happen tomorrow or after the Fed meeting? Gold is getting ready to climb. It's hitting 2,000. Let me just check a recent one. It's at $2,054, and it's sold for 2,070 TL. Okay, according to traders that I follow, gold traders, they said if it passes 2,058, it's 2,054 right now. They say buy, buy, buy. Okay, so I'm not saying it. It's traders. That's what their lines are saying, buy here, sell here. If it goes under 2050, they say sell, that's for a day trader, of course. But if you are looking for an opportunity to buy, if it crosses 2058 after the Fed meeting, you can say it's too late. Its price went up, but the trading doesn't work that way because you buy the trend. So that's what they calculate. They say if it hits 2058, it's going to go up to 2060, 65, whatever. So that's the short term they are buying. If it goes down under 2050, they are going to short. They are shorting it, and they will not short it until 1,900. They will short it for like 2040. Okay. So basically, everybody is now betting on these issues because gold is the only place to run away when stock exchanges are failing. And today in China, I have some news from China. Because the Chinese stock exchanges failed, there's a huge demand on gold side, and which increased the gold physical prices. And I just want to mention again, yesterday, India last Friday placed a 50%, 50. It's a huge amount. It's like you buying gold for $2,040 an ounce. Now it's going to be 3,020 with the importation for the all smaller gold items, except the let's say bulk of gold. So we will see how that goes. And today they also passed another rulings in India. Looks like there is big trouble in foreign currency problem in India as well. Although they got a lot of the business from China, they have lack of liquidity. That's a big problem. Liquidity and job growth are opposite, friends. Most of you may not know. If I have a small company, if I'm selling like cupcakes very quickly, like a fire, and that's good job, right, for you. But I have to go to my suppliers and buy more to sell more. Otherwise, I have to say, sorry, I ran out, So you have to find money. And the seller says, okay, pay me, I'll give you more. You say, well, I didn't get the money yet from my customers, because that's not how commerce works. Commerce doesn't work cash, It works in intervals. You have to send the money, wait for the products to arrive, all these. So for the US, I'm expecting a recession with inflation. So don't think that inflation is good, it's slowing down. It's going to come back for sure. But so it's going to be a double-edged problem. It's what we call inflation in an environment of recession. It will be not slumpflation. That may be much later, but it will be a big one of these bad inflations. Okay, so both inflation and recession together. Okay, so forget about the namings. I can give you many names: shrinkflation, skimflation, this and that. Those are just made-up terms. I'm just explaining what it is. Sometimes when people listen to somebody, they think if you're using very, words that are not understood by many people, that you know something much more than others, although they don't understand what you say. So I try to use only the language people who watch me. They don't have to be all economic experts, that they all understand what I'm trying to say. So basically, we are now going into this meeting. I will not make a live meeting during this Fed meeting announcements, because there will be, in an half an hour, there are, question and answer section. So I like to listen to that, because more is learned through those questions if people ask the right questions. Okay. So, but many people, as you will see, only ask interest related questions. However, the main problem is not the interest related problems. The main question is, how will they tighten the monetary base? Okay. Will they stop tightening? Will they continue expanding the monetary base? So that's the real recession fighter. Today, a Turkish Minister of Finance announced that if US can succeed, if Europe can succeed, why not we cannot succeed in inflation fight? Well, there is a small problem. They both have reserve currencies, euro and US dollars, and you have your local TLs. Okay, so that's a totally different game, because your exports will fail. No foreigner will bring in you any investments unless you give them some good benefits, very high benefits. So it's not like US. You cannot print your way out, at least for temporarily, or Europe, where they can print euros. If euro comes to Turkey, I can quickly sell my house, because, or even US dollars, even Japanese yens, because I know they are acceptable in the market in the minute. But when you send your money to abroad, to Japan or USA, you will see that it's not very popular at all. Okay, it's like sending African money to Turkey. So basically, this is all I will say for tonight. And I hope you had a very nice January. February depends on how you position yourself. If you are strong on gold and let's say securities in US, you better be, because they didn't bring too much money. They are security, insurance. Okay, if you don't have insurance, don't buy a $15 million house. If you don't have insurance, don't buy a very expensive car. So if you don't have an insurance of gold, don't buy extremely lot stocks from which jumped up quickly. They can come as fast as they went up with a rocket. They may come down without a parachute. So that's why you need insurance. So even if you have technical stocks, if they collapse, your gold will protect you to an extent. Okay, to an extent, not completely, but it's better than having no security. I hope you all. Another way is bonds, U.S. bonds, government bonds, but I don't trust in them, because they give you under inflation. With gold, at least you have an option. There is an option. There is a possibility. With a 4% annual, Turkey is giving 8%. To foreigner U.S. dollar bonds. Why don't you invest double their money? Why invest in USA? Okay, I hope you all nice day. And then the people asking me, why are we buying physical gold? I'm asking them, why aren't Americans buying 8% Turkish government bonds, Euro bonds? Okay, that's why I'm buying physical gold. Okay, see you later. Bye bye.